Tax time is right around the corner, and as we lead up to June 30, it's important you claim everything you're entitled to. This can apply to those working from home, attending a course or travelling, as well as checking your super contributions. And to take us through all the tips to ensure we're well prepared ahead of tax time, accountant Allan Mason. Allan, thank you for joining us. Now,
My pleasure. Thank you.
you've shared some of your top tax secrets with some of Australia's wealthiest people. As we approach the end of the month, dealing with taxes can be a challenge for some. Where should people begin?
Well, the first thing is to make sure you think through what you've done for this last year and see if there are things that you might have missed. Have you travelled for work? Have you been to the airport, done a course? Have you been working from home? Have you used your car for business purposes? So make sure you don't miss anything. You know, the sad fact is that over 20% of taxpayers underclaim. You think that's a bit odd. I mean, we must love paying tax. I don't think so. But we underclaim. Why? Because we're slack with our record keeping.
Okay, so let's start with those people working from home. Now, since the pandemic, most Australians have changed the way they work and many have a home office. What are some of the claims they're entitled to?
Well, the tax officers have made it extremely difficult. They've got a two-tier structure happening. So up to the end of February, you could claim on it using a shortcut method. Post-February, you've got to... prior to February, you had to have a dedicated area. Post-February, you didn't. So unfortunately, you're going to have to keep your records correctly and confirm every hour that you have worked from home. So if you've got a diary, keep a record of those hours and claim 67 cents for every hour. I know it doesn't sound much, but it will add up.
And what about travel? And what about travel expenses? Both as an employer and an employee, what can we claim and how do we go about it? Because that can be a tricky one, travel.
It is. And again, the tax office have done a great job to give accountants more money because they make it more difficult. And that's why a lot of taxpayers don't get it right, because the system is just so difficult. So if you're an employee and travel from home to work, generally will not be deductible. But if you've got tools, or if you go to the bank, or if you go from, say, one job to another job, so a job site, or you've got to go to another office, the travel from that first to the second job will be allowable, and you can claim 78 cents a kilometre, up to 5,000 kilometres in a year. So that's just a shortcut method, if you like. If you travel more than 5,000 Ks, you've got to add up all of your expenses on your vehicle and work out a percentage of business use using a logbook. So again, it makes the system a little bit hard. And that's why when I wrote Tax Secrets of the Rich, I wanted to distill a lot of those complicated areas and just make it a little bit easier to follow for a layman.
Yes, absolutely. And what about superannuation? How can our super actually come in handy here at tax time?
Well, remember with superannuation, it's like taking money out of your left pocket and putting it into your right pocket. It is your money. So by depositing it from your business account or your personal account into your super fund, it's still your money. It's still there for you. You get a tax deduction. So moving money from one account to another gives you a tax deduction. You're allowed $27,500 as a tax deductible amount. If you haven't paid that much super in the earlier years, there's a 5-year top-up rule that allows you to catch up on all those shortfalls. So say if last year you only paid $10,000, well, you've got another $17,500 that you could pay this year, pick up on the prior year amount that you did not pay. So you could, in that example, you can catch up another 10, 20,000, whatever it is you haven't paid. That 5-year rule expires. So at the end of year 6, the earlier ones drop off. So don't lose out on that. Don't miss out.
Yes, that's very important. Yes. Now, lastly, you mentioned in your book, Tax Secrets of the Rich, you make reference to the late Kerry Packer, with who you worked for at the time. What were some of the top rules that you applied when dealing with Mr. Packer and his business?
Well, remember that was a different time. That was a long time ago. Tax office have got a little bit smarter or more difficult, if you like. So fringe benefit tax, all those things now apply. That did not apply then. But the main thing is to plan. So we're coming up to June 30 and you go, well, I've had a capital gain in this year. Let's say I've got 2 or 3 rental properties and I've sold one. I've made a capital gain of 100 grand for simplistic reasons. So why not, instead of paying tax on that capital gain, prepay the interest on another property, a whole year's interest? And we did this at Consolidated Press many times. Pay a whole year's interest on another property to offset the capital gain you've just made on the one you sold. Voila, no tax to pay.
Oh, fantastic. Look, Allan Mason, you're a wealth of knowledge. Thank you so much for your time and your tips. No doubt they'll come in very handy.
And look, grab a copy of my book.
Yes, absolutely.
Every situation you can think of.
Wonderful. Thank you again. Have a lovely afternoon.